Tesla bucking the broader tech sell-off, up as much as 4.8% today and closing 1% higher. Stifel doubling down on its bull case for the stock, hiking its price target from $483 to $508 a share, which implies 24% upside from today's close. The firm citing strong progress on full self-driving and robotaxi, even amid headwinds for the EV business. Stephen Gengaro is behind the call. He joins us now. Stephen, great to have you with us.
Thank you for having me.
This is a sum of the parts analysis, and so I'm wondering, how big of a part is robotaxi, which is showing, as you point out, real progress. I mean, you can actually see the deployments happening in various cities. And how much is, for instance, Optimus, which is very much pie in the sky at this point?
Yeah, and Melissa, right now, it's really a data point driven stock, right? So we're going to get incremental data points, we think, on the success of FSD, and that's ultimately drives the robotaxi business. When we look at valuation, just to answer that question specifically, we have about $130 of our valuation that's tied to the core auto business, storage and generation, and then FSD and robotaxi make up about 185 and about 160 of the upside to the valuation.
I'm curious in terms of that upside of 160, because 160 it's a lot out of your price target, and it's a lot built on promises from Elon Musk for a technology that when that Optimus was here in Times Square, it couldn't even grasp a little packet of gummy bears. And I'm just wondering, and I'm sure as an analyst, you've gone to these analyst days, you've seen the Optimus in action. It can't really do that much at this point. So how do you sort of think about that in your model?
Oh, yeah, just to be clear, on the Optimus front, our valuation for the Optimus piece is only about 29 or $30 a share. We're very conservative on the Optimus side. It's really the FSD business and then the robotaxi business, which drives the bulk of the valuation of the stock.
Stephen, his pay package to me is one of the many reasons. Well, let's put it this way. On the top of the list why you should be long this stock. I mean, he's incentivized, obviously, for the stock to do well. Does that play into this in any way, shape, or form in terms of your upgrade?
We raised the price target really coming out of earnings and really just doing a little more work around full self-driving robotaxi. I mean, the pay package is obviously enormous. I think the biggest thing about the pay package is when you look at the EBITDA targets that are out there, I mean, they are just off the charts high, right? So if he gets anywhere near those objectives, the stock's going to be a lot higher than it is today.
Stephen, how about FSD? Where do you need this to be in terms of penetration by, say, 26, 27? Or where are you on 26, 27? And where do you really need this to be? And are we worried about any other competitive threats there?
Yeah, no, we are. And I think the two things that we worry about most with FSD is one, Tesla's doing this with a camera-based system and AI, right? And everybody else has some type of LiDAR system. So that's probably the biggest risk in our view. From a penetration perspective, in 26 and 27, it's low, right? Our model probably has 15 or 20% of Tesla buyers, sort of subscribing to FSD, and then it gets a lot higher in the later years, and we saw back over an 8 to 10 year time frame. But I think what you'll ultimately see is you'll see increased adoption as people are exposed to it. And I've been behind the wheel of several of these in the different iterations of FSD, and it is getting better and better. And I think it's something that when people experience it, much more comfortable utilizing FSD and paying for it.